But yeah, can't complain. We're up over 20R in like not even a full month. I back tested this. So yeah, thanks everyone for joining today. Excited to share this SMB Capital scalping strategy with you guys that I found and did some testing and tried to come up with a few rules to make a little more mechanical and something that you guys can definitely backtest. He said in the video, I shared it in the Discord, but basically he shared the video, and it's essentially really any liquid stocks that have relatively tight spreads are generally what they would trade for this strategy. And obviously with prop firms, we're typically limited to indices. So I started testing this today on the Dow US 30, but I think you could probably test it on really any of the other indices, the S&P, the NASDAQ, maybe even the Russell. I know that's a little less liquid than the others, but yeah, I played around with it and started out with like the 5-minute time frame. I think it could also work on other time frames. I saw they were sometimes even using the 1-minute time frame in their examples, so you can definitely test it out on other assets and other time frames. But also just kind of going off the video, they showed some examples anywhere between like 5 a.m. and noon New York time. Obviously, for those of you that don't know, SMB Capital is based in New York, so they're probably not going to be trading outside of kind of these hours. And just generally from my own experience, you tend to see volume drop off a little bit in the afternoon New York time, so that's why we're kind of cutting off at lunch New York time. So whether you want to trade this late London session or the early New York session, we've got kind of a 7-hour window here that you could trade both or just one or the other. So as I go through this and kind of talk through the strategy, feel free to reach out in the chat if you have any questions, and I'll try and do my best to answer them. But overall, this is a pretty simple strategy. I'm actually going to talk through the second entry trigger first because it's a lot more simple. We're really just going to be using the VWAP and volume on our charts for this strategy. So for those of you that have never used those, I'll show you kind of what they are specifically and how to add them to your chart. I guess I can just do that real quickly. If you are in FX Replay or TradingView, it's going to be the same indicators. So you just come up here to indicators, and then it's this volume indicator. It's really just called volume, and it'll kind of give you volume bars at the bottom. And then this VWAP indicator, I think I used the VWAP sessions. Yeah, VWAP session. And all you're going to do for this one, I think when you first put it on your charts, it's going to give you a lot of different bands. Like it'll look something like this, potentially, with all kinds of like standard deviation projections of everything. We want to just strip all those away. So we really only want the like kind of core volume weighted average price. And yeah, for those of you that aren't familiar with what the VWAP is, oops, I need to make sure I save all those changes. Sorry, 1 second. So settings, I need to turn these off. I don't know why they came back. Save. All the VWAP is it kind of resets, at least this version, it resets 1800 New York time every day. And from that point forward, it literally just gives you kind of a combination of the price action plus when the volume kind of ticks in, and just gives you kind of a moving average of sorts on the chart. And we're going to be using this to determine where to take some trades, whether we're looking for like flips of this VWAP for the entry trigger 2, or the whole point of offsides generally with this strategy is if we see big deviations like to one side or the other, they're looking for reversals at some point, and there'll be a few kind of specific triggers we're going to look for that. So the first one is super simple, and if you're a beginner trader, you can honestly just stick to this entry trigger with this model because the other one's a little more complicated. But literally all we're looking for is a strong closing candle that flips on the other side of the VWAP, and we're going to look for a 1-to-1 risk to reward just using the most recent low. And the kind of key to this one is looking for like a decisive candle, also kind of like a strong candle of sorts. And really like the difference between the body and the wicks is really the main thing you want to look at for that. Like in this example here, and Bernd also talks about this, so I might have gone over it a little bit when I did his Globex strategy overview. But really what you want to see is like these are like almost half the body of this candle is a wick, and so it's pretty indecisive. Like there were quite a lot of buyers, but there were also quite a lot of sellers that kind of reacted to push it down. And obviously a doji is like the most indecisive candle you can have. So even though both of these candles technically closed on the other side of the VWAP, like this wouldn't be a valid entry for us. We want to see more of a decisive candle where the closure of the candle is pretty close to like the high of the candle in this case, or vice versa for shorts. You want to see it closing pretty strongly when it ends. And so after you see a strong closure on the other side, it's literally just going to be a market order. You're going to use the most recent low in this case for your stop loss and just target a simple 1-to-1. It's about as simple as it gets, and you're just expecting that, okay, now we flip the VWAP, we're going to at least expect to see some kind of continuation to the other side. No trade management, and yeah, again, for beginners, I think you could honestly potentially only trade this trigger for this model and still get decent enough returns if the second trigger I'm about to go over is a little more complicated. So should be pretty straightforward, and again, we're going to be backtesting, so I'll show you guys a bunch of examples. But the second trigger, I guess I called this one entry trigger number 1. I wanted to go over this second one first because it was simpler. But this is like the main, I guess, strategy for main entry trigger for this model that kind of goes in line with the offsides. And the whole point of offsides is, as price gets further and further in one direction away from that VWAP, he kind of says, there's a lot of people over leveraging at that point, kind of jumping on the trend. And so once you start to see a reversal, it doesn't take a whole lot for price to kind of move back, kind of a little mean reversion, because there's a lot of people that were over leveraged and have to exit their positions. And so really what we're looking for is after price kind of pushes above or below that VWAP, we're going to be looking for reversals. And this is where I kind of played around and tested quite a bit. The video didn't really have a whole lot of mechanical criteria for it, and I wanted to try and make it a little more specific for you guys. And so the first thing that I was able to find that I think will make it a little more high probability and give you guys like a better chance of like identifying when the reversal is going to happen is this concept called volume divergence. Trend reversal divergence is also kind of what it can be referred to, but really all it's looking at is like an exhaustion of the trend. So if price is moving to the upside and we see continued volume increasing, then there's a likelihood that that trend is going to continue. On the flip side, if the price is moving to the upside, but we're seeing fading volume, there's at least a higher probability that we're going to see a reversal soon. Same thing applies to downtrends. If you see a downtrend and volume is increasing, then there's pretty good likelihood that that trend is going to continue to the downside. But if you start to see price making lower lows, but volume actually, sorry, this graphic. Sorry, yeah, it's these two that I was showing. Okay, so this is the case where the trend is likely to continue. So you have lower lows but higher highs with the volume. So basically volume is increasing with the downtrend. So you're going to see continuation. But in this case, we have a lower low with price, but volume is fading. So both of these cases, basically, if price is trending one way or another and you start to see volume fading, that's like maybe an indicator that we're going to see a reversal soon. So that's really the core concept, and I'll show you guys what this looks like on the chart, so we can like look through some examples. But that's kind of the first thing we're looking for. After we identify volume divergence, we're going to mark out like the most recent high and low, and that's kind of what we're going to be using for our entry stop loss. And we're going to need a tool that has a midpoint. So I like to use the parallel channel tool, but you can also use, I think the rectangle tool has a midpoint, or the fib retracement tool. Really whatever you're most comfortable with. I think any of these would be fine, but just kind of show you guys what we're looking at. So in this case, we had a downtrend. Let's assume the VWAP was up here, so we're kind of below the VWAP at this point. We've got price making a lower low here, but you can see very clear volume divergence, but where even though price made a lower low, we're seeing a lot lower volume at this more recent low. So kind of showing you that this trend is starting to exhaust and we could potentially see a reversal soon. So after we identify that volume divergence, we want to mark out the most recent high and low, and I just like to use this parallel channel tool because it's really helpful. And the entry trigger for this is we're going to be using a buy stop order, and so again, it's a little less common. So for those of you that haven't heard of it before, it's basically an order that won't trigger until price comes above this level, and vice versa. If it was a buy sell or sell stop order, it's not going to trigger until price gets below a certain point. But you're basically going to put it at this recent high. And so it'll trigger you in once we make a higher high here. And then the stop loss, the reason we need this midpoint is because that's where your stop loss is going to be for this strategy. And we're simply going to target a fixed 2R with this model. So nothing crazy, either 1R or 2R, depending on which entry trigger it is. But to kind of summarize again, looking for, in this case, prices trended below the VWAP quite a bit. We've got our volume divergence. We mark out the high and the low with the midpoints. We put a buy stop if price makes a higher high, using the midpoints as our stop loss, and we're going to target out 2R. As I was testing this, I didn't personally use any trade management. There could be a point where it makes sense to put stops to break even with this model that as you backtest and optimize, but just for today, I'm not doing any trade management. I don't think they talked about any in their video either, so it's either going to be a 2R win or a loss. But let me know in the chat if there's any questions. I know this specific trigger is quite a bit more complicated than the VWAP flip, and I'll show you guys a couple examples too that hopefully will help reinforce it, and then we'll look over the checklists. So a couple examples in this. First one from the strategy PDF that has actually one of each of the trades. So the first one is the offsides reversal. So as you can see here, it's a little hard to see because volume ticked up quite a bit later, and so these earlier bars are it's a little harder to see. But as price made a lower low here, you can see that the volume was clearly trending to the downside, which is our volume divergence. That's kind of the first criteria we need to see. And so at that point, we would mark out the high and the low, like most recent high and low. And it didn't quite tick above here, but over here, price finally came and kind of took out that most recent high. So that would be like basically as soon as price gets above there, it's going to tap us in with that stop limit order, a buy stop. We're going to put our stop loss at the midpoint and target out a fixed 2R. So that's kind of the first trade example from this screenshot. And the second one, we also had a VWAP flip. Like while this first trade was open, it didn't happen very often, but there's going to be a few times where you'll end up entering multiple trades at the same time. So very strong candle, closed at the very top, pretty much, yeah, almost at the high of this candle. So really strong candle. Didn't close too far past it, but it did close above the VWAP here. So exactly what we're looking for with the VWAP flip. Do a simple market entry at that point, stop loss at the recent low, targeting out a simple 1-to-1. And again, definitely is going to be some opportunities to potentially trail stops with potentially both of these models. The VWAP flips, in this case, looks like it really took off. So that's something after you guys backtest the base model. I've shown you a lot of resources how to optimize with potential trailing stop losses, but for the base model, we're just going to simply go for 2R with these offside reversals and 1R for the VWAP flips. So second screenshot in the strategy PDF, there's actually 3 offsides reversals that happened in the same session here. So the strategy does populate like multiple trades a day. So yeah, I think that's one of the reasons why they like beginners to use it when they're training people at SMB Capital, because it gives people like more live repetitions than other strategies that are maybe only like a few trades a week. This one's multiple trades a day. And so let's walk through each of these examples. The first one, we had a higher high with price, a lower low with volumes. There's our volume divergence. We mark out the recent high and low. We put a sell stop at this recent low. This one almost hit the stop loss, didn't quite come up to the midpoint, but that's where our stop loss would be, and we targeted out 2R. Again, saw some continuation as well that you could have trailed this one a little bit further. A couple examples at the bottom here. We had a lower low here with fading volume, so we had volume divergence, mark out the low and the high, used a buy stop at the kind of break of this recent high, and unfortunately this one went up probably about 1.3R or so, and then came back, but it was a loss. That's totally fine. Then we put in another lower low. So kind of looking at this broader trend line here. So still seeing pretty significantly decreasing volume. So we still have volume divergence. There wasn't like a big increase in volume when we formed this lower low. So same thing, mark out the recent high and the low, do a buy stop as price gets kind of above this high, stop loss at the midpoint, and target out 2R. So in this case, we had 2 wins and a loss for 3R just from the screenshot. So there is a couple other rules for the offsides reversal that I was playing around with. So I was noticing, and this is just again from kind of my own just like testing around with this myself. I was noticing that for the offsides reversals, if like you're entering immediately into an opposing fair value gap, those trades are going to be a lot lower probability. So what I mean with that is you see how we have a fair value gap right here from like there's basically a gap between these two candles. If this candle had not already tapped into this fair value gap and like our entry right here was like the first tap into this fair value gap, then we're going to pass on those trades because as you guys might know from technical analysis, like fair value gaps are often provide like support of trend continuation. And so we don't want to like our entry to be immediately facing like resistance. We want it to be like more freely flowing. And so we just want to make sure that for these offsides reversals, like where the entry is, we want to make sure it's not the first tap into a fair value gap, if that makes sense. And hopefully we'll at least run into one of those examples. But if not, hopefully that made sense from explaining it. And then a couple other rules. I'm not going to enter during red folder news. There's generally too much volatility with that, and with the tight stop, you're probably going to get knocked out before it works. If you have a trade open kind of coming into news, obviously make sure your prop firms like don't have rules against news trading, but otherwise like you can, generally hold through the news as long, as your prop firm allows it or something. And then same thing with New York Open, similar to news events, there's quite a lot of volume like in liquidity that injects right at New York Open. So we're going to wait like 10-15 minutes when 9:30 Eastern comes around, just so we don't get knocked out by trades just kind of with that initial uptick in volatility. So as usual, I provided the trade checklist for you guys. I think the only thing I didn't add to this offside reversal is obviously if you're below the VWAP, you want to look for longs, and if you're above the VWAP, you want to look for shorts. But hopefully that makes sense. We're looking for reversals for this strategy, so hopefully that's kind of a given. But yeah, again, the VWAP flips are super simple. Decisive candle on the other side of the VWAP, market enter, using the recent stop as the stop loss, recent higher low as the stop loss, and target 1R. And then as I kind of went through all the things for the offsides reversals. So with that, let's go ahead and dive into the backtest a little bit. I'll show you guys kind of how I have my my session set up. And again, for those of you that are new, I definitely recommend every time you start a backtest or even just set up a chart on TradingView, make sure to save out a specific layout for whatever strategy you want. So you can name it whatever you want, and then anytime you come into the same session, make sure you load the specific layout so that all your drawings and all your indicators are kind of what you want. So all I have again is the VWAP and the volume. And again, for the VWAP in this style, I think when you turn it on initially, it has all these different bands and everything, and we really just want to clear out all of these others. So it's literally just the VWAP. And you don't have to change any of the other inputs. Everything else should match kind of what's on TradingView. And it anchors again every session, and there's no offsets. So that's the first indicator. And then, yeah, just this volume. So you come in here, just look for volume. It's literally just the one that says volume, and it gives you the bars at the bottom. So it's really all we need. Very simple. We don't need the session highs and lows or anything like that. So just those two indicators. And then the one thing I did want to mention is that since the VWAP resets at 1800 every day, when you go to the next day, you might want to scroll out a little bit so that you make sure the VWAP resets at that session, because it needs to load that data a little bit. So I'll show you guys what I mean, but make sure that you get that kind of reset point so that it's correctly set at the right point. So yeah, with that, like I said, I have my go-to setup to go to 5 a.m. Each day, New York time. That's when we're going to start, 5 to noon. And I've already backtested quite a bit. I'm up about 20 R from initial testing with this, and we'll dive into some live backtest. So yeah, feel free to ask any questions at any point if you're wondering why I took a strategy trade, or if there's any rules that maybe I miss while I'm taking a trade. You want to call me out, or yeah, it's any questions at any point. Feel free to reach out. But let's see if we can get through some examples. So coming to this day, we have we're below the VWAP, so we're looking for a potential offsides reversal. See if we get a lower low here. Looks like we already have some potential volume divergence, so I'll kind of zoom in a little bit so you guys can see the volume a little bit clearer. So as you can see here, we made a lower low, and you can't really attach to these, but you can kind of put it on the chart to visualize. So between these kind of lows on the chart, we have a lower low, put it on volume, so fading volume. So I can mark out the most recent high and low, and all I'm going to do is basically put a buy stop at the start here. And again, I'll zoom in a little bit so you guys can see a little clearer. So I'm putting a potential entry here at this recent high, and using the midpoint as my stop loss, and simply just targeting out 2R. So after I have my position tool set how I want, I'll come in here, I'll place the order. I'm going to use a buy stop for this case, because it's not going to trigger until price gets above that point. I've been calling this one entry trigger 1, so I can filter the analytics later and kind of see the differences. So I have that populated, and if price gets above this point, it'll tag me in the trade. So now we can play it forward. And we made a new low. So this is kind of another cool reason this strategy is interesting. It doesn't tag you in until price kind of makes that higher high. So even though we got close to it, we didn't tag into this trade. So there are going to be times where you have a trade populated and you're ready to take it, but it doesn't reverse yet, and it kind of keeps you from entering those reversals too early. So we'll delete this one and look for potential later setups. So now we have another lower low, and we have continued to fade volume. So pretty much from this low, volume has been slowly decreasing. If we saw a increase in volume here, then we would need to wait a little bit longer. But we still have continued to see lower lows in price action and volume fading. Not too significantly, but in general. So we can still look for a reversal. So I'll go a couple candles more forward, mark out the recent high and low. Potential buy stop at this candle right here with stop loss of midpoints, targeting out to R, and see if this one triggers. So I'll place the order, buy stop. Again, I like to always use 1% of my initial balance so that in my analytics, every 1% I make is going to be 1R. So that's just what I've always done, what I like to do. So entry trigger number 1, let's see if we get tagged into this one. Not quite. All right, we're tagged in, and unfortunately this first one was a loss. But met all of our entry criteria. There was no fair value gap above this point that's going to be like the first tap in. This first trade was lost, but that's totally fine. It may end up playing out. We just got knocked out first. So potentially could have a VWAP flip if we get a decisive candle close above here, but otherwise we're not going to look for second attempts with this strategy. The only time that I would look for entering on the second attempt is like maybe if this first breakout was into a fair value gap, then I'll wait for the second one. But I generally don't think it makes sense to take like 2 attempts at these until you get all the criteria lining up again. So playing forward again, we have these lows right here. You can kind of see we did have a slight increase in volume, so I'm not gonna kind of consider a reversal at this point, even though it might happen. It doesn't meet our rules. All right, there we go. Really nice decisive candle closing above. So going to do a market entry at this point. The stop loss is pretty big on this one. So when we do optimizations, there might be a point where if the stop loss is too wide, maybe it doesn't make sense. But it's pretty strong, and we're only going for a 1-to-1, so we can see if price will get up here. So we're going to do a market entry at this point, not a buy stop. I'm going to call this one entry trigger number 2 because the VWAP flip, and see how this one plays out. All right, starting out stream with a couple losses, which is good. I want you guys to see that any strategy will have losses. We came up and took out these relative equal highs and then reversed at that point. So unfortunately didn't quite get it. But yeah, the stop loss is pretty wide in this one. So I think that's why it was a little lower probability. Overall, these VWAP flips are pretty high probability actually. And yeah, none of these 2 candles that closed right here weren't super decisive, so I don't think there was a reason to enter the other side. But yeah, I think until this red candle here, there really wasn't a super decisive candle. But yeah, overall, just kind of seeing we have a big increase in volume right here now that New York has opened. So kind of waiting to see at least 10-15 minutes to see kind of let the initial price action shake out a little bit. You can see it's often very indecisive at the start of New York session, so we don't really want to get caught up in any of that. Potential, it's not the most decisive candle. There's a pretty good wick here on this. I'm not going to consider a VWAP flip at this point. Really, yeah, we're just kind of chopping around at New York Open. We could look for offsides reversals or VWAP flips to the downside, so we're looking for shorts. If we make a higher high with lower volume, so you can see here, it's a little hard to see, I'll zoom in a little bit. We have actually slightly increasing volume. If you look at these bars that correspond with these highs, we actually have increasing volume. So we don't have our volume divergence yet until now. So you can see we have formed a higher high with price, and now we have a lower low with volume. So now we have our volume divergence. We could potentially start to look for a reversal. There's not really any clear lows during this leg, so I'd probably go all the way back to here for the kind of recent high to low. It may go a little bit higher first, but I will place this order just in case. So potential 2R buy stop right here. Sell stop because we were shorting. So entry trigger number 1. Let's see if we get tagged in. I made a slightly higher high, so we need to adjust this a little bit. Still fading volume. So I'll adjust this to the most recent high so we have our tool set up correctly. Make a couple tweaks to the position tool. And then we'll do a sell stop here. Entry trigger number 1. All right, and then we saw a pretty significant uptick in volume that formed a higher high here. So now we don't have, we no longer have our volume divergence. So we need to wait a little bit to see if this trend is going to reverse. Otherwise, we don't want to fight the trend until we start to see signs that it might be reversing. So I need to see a higher high with lower volume. Really just kind of taking off right now. And these volume bars are pretty much the exact same. So again, expecting continuation of this trend until we see a higher high with lower volume, and unfortunately we never got it. We had, like I said, it's a little hard to see now because this volume bar took out a lot of stops, but this is kind of reinforcement of the idea in general. As this trend really accelerated to the upside, there was a lot of people over leveraging, kind of coming to this point. So it didn't take a whole lot for these people to start having to close their positions, which led to this really impulsive move to the downside. Unfortunately, like I said, these highs, I need to go back actually a little bit so I can show you better. But the volume bars were pretty much the exact same. It looked like, yeah, there really wasn't any volume divergence at this point. I think this high here was actually just a tiny bit higher. So if this volume had been lower, we would have definitely had a potential trigger here and could have caught that move down, but unfortunately just didn't meet our criteria, and that's totally fine. Definitely had the right idea though, with the price being offsides at this point. We could potentially take a VWAP flip at this point. Again, it's a super wide stop, so it's but it's only 1-to-1. So let me see where our most recent high is. Looks like right here. It's probably our most recent high. So we'll use that as a stop loss and simply targeting out 1-to-1. So we missed the reversal, but we can potentially catch at least part of the move with this VWAP flip. So I'll say this one's entry trigger 2. And see if we can catch this continuation. Let's play it low forward. Here we go. And yeah, you'll notice that these VWAP flips, I mean, it's only a 1-to-1, so the win rate's obviously going to be a lot higher than the offsides reversals. I think I was seeing over 80% potentially with these VWAP flips, 70-80%. They're pretty high probability because you're entering into strength and not looking for a whole lot, so it makes sense that they're pretty high probability. So overall, yeah, like I said, would have been nice to catch both the offsides reversal and the VWAP flip in this case, but at least we got part of the pie, and we stuck to our rules. We didn't force a trade that didn't meet our criteria. So better to stick to your mechanical execution than deviating from it. So let's see here. We've got a lower low right here, and we have fading volume. So we could potentially look for a reversal. The only problem is we don't really have any high in this point for to kind of identify our recent high to low range. So I need to see some form of high develop before I can mark it out. So there we go. Now we have, again, continued movement to the downside. I'll kind of adjust this volume line here. So we have, again, continued volume fading, and now we have at least a recent higher low. Play a couple candles forward just so we might have a more accurate low. So there we go. We've got our volume divergence. We have a recent high here, recent low. There was a fair value gap here, but this candle has already tapped into it. However, there's also one above here. So this is a good example of an invalidation that if we get price to kind of come in here, I'll show you guys just with the path. So if price came up here into this buy stop area to trigger us in, because of the rule that if the entry is the first tap into a fair value gap, then we're not going to take the trade because there's a good chance that we're going to immediately be facing some resistance at this point. It's just going to make our trade a little lower probability. So this is a good example where we would not take this trade would not take because first tap into fair value gap. So it's just we're just trying to identify things that make our setups higher probability. And I was noticing that there was more often than not, like these instances were fading. You know, we may continue lower a little bit and see something valid, but if this one specifically like broke out right here, I wouldn't take it for that reason. So hopefully that makes sense. And I'm glad we like saw an example to show you guys. So let's see if we get something to develop a little lower. There you go. So we would have pretty much immediately had a loss with this. So this is a great example of why I don't take this. It didn't actually even tap into, it actually front ran this fair value gap a little bit, but very strong reaction. And like, we don't want to be entering like along when we're immediately facing resistance from people being interested in selling. So this is like entirely why I don't take these offside reversals when this is present, and it'll save you from more losses than wins. So continue to look for potential future setups. We could still have a VWAP reversal. I don't care about the fair value gaps for the VWAP reversals, VWAP flips, because we're just buying into strength at that point, and likely will like invert this fair value gap if we see one of those entries. So could potentially have a VWAP flip here if we see a nice strong candle closing above. That's not above yet. So there we go. Really nice decisive candle flipping the VWAP. Like I said, we've inverted this fair value gap now, so really nice strength into this move. So we'll do a market entry at this point. Most recent low, I wish there was a low right here, but unfortunately we got to go all the way down here technically for our most recent low. And again, this is something you can definitely play around with. You know, maybe you can just go back a couple candles from the entry, or use like a body at some point instead of a wick. You could definitely play around with optimizing the stop losses in this, but we're just going to use the most recent low to keep it simple for the initial model. We're only targeting a 1-to-1. We've got some potential highs over here we could take. So we'll do a buy market. This is our entry trigger 2. And let's see how this one plays out. All right, it's taking its time. With most futures prop firms, you're not allowed to hold the trades past the end of the day anyways, so we would have better out here and just close it for, about 0.4 R. So I'll probably just say that. I'll make a note here, like end of day close. This doesn't happen super often, end of day close. And again, if we would have had a slightly tighter stop, we definitely would have hit our target. Unfortunately, the stop loss was pretty big, 97 points. So going to the next session. I'll do a few more trades, and then we'll go ahead and take a look at the analytics. So we're below the VWAP. We can either look for offside reversal or a VWAP flip. We've got increasing volume at this point, so not really interested in any offside reversals yet. Need to see fading volume with a lower low, which we get right there. So I'll zoom in. Let me make sure I've got the VWAP reset. So it does reset every session. So you just want to make sure that you scroll back to make sure it has like reset. So now let's see, we could mark out our recent high and recent low right here. We could have a buy stop right here with a stop at the midpoints, targeting out to R. So let's see if we can get tagged into this one with this buy stop, entry trigger number 1. Okay, not tagged in yet. There we go. We're tagged in, and nice take profit. So as you can see, we're literally just waiting for price to start reversing. We're going to hop on once it does. We've got our kind of measurements for where our stop loss needs to be, and we're literally just going for a simple 2-to-1. I potentially could have had a VWAP flip here, but I just don't like how there's like a good portion of this body. And I think like if you really want a mechanical definition, something that I've used in the past is like maybe like more than 25% of the candle can't be like a wick, or the body needs to be like, or like the wick can't be more than like 25% of the body. But the challenge with that is like, you know, you need to execute when this candle closes, so it can be difficult to like measure that and execute at the same time. So personally, like there might be a tiny bit of discretion with these decisive candles, but I think that's fine. It'll probably be better for you to just like look for them and train your eye over time than try to make like a super mechanical rule that maybe is a little less discretionary but harder to actually execute. So I probably wouldn't personally have taken this one. It might work out. We'll just play forward and see. Actually didn't in this case. We actually potentially have a pretty strong reversal. So I'm going to take this reversal just to see how it would have played out, because that's a much stronger candle in my mind. We got a really strong candle to the downside here. Could potentially use this recent high as our stop and target out just a simple 1-to-1. So buy markets. This is entry trigger number 2. Let's see how this one would have played out. Unfortunately, another loss. So yeah, just kind of chopped around this range. And again, it's going to be like the highest probability ones for this is when we have a strong trend and the entry is like in line with the trend. This one like kind of snuck above it and then reversed. So I think these ones will be a little lower probably, but they definitely play out as well. So let's go ahead and take a look at the analytics. I'll show you guys what I was able to backtest from testing as well as a little bit today. So I'll change this to UTC -4. So we're looking at the same time period that we were testing. I did actually want to show you guys a cool new feature now that kind of snuck in there you guys might not have seen. We actually have a new feature where you guys can share your backtests, similar to how you can share your TradingView charts. It's pretty cool. It is like intended right now for like a temporary feature. So it only works while you have this sharing enabled, and you can only share like one analytics at a time. But whether you have a mentor that you want to like show, hey, look at all my backtesting I did, or a friend, or you just want to share in the Discord to show people your progress and kind of get some insights, it's a really great way to share the entire analytics page versus just taking the screenshots. So shout out to the devs for enabling that. I think it's a really cool feature that was added, and you guys can see the see the analytics. So overall, like a really nice equity curve from this model. I mean, again, you'll want to see a larger sample size. Maybe this period, these for a few weeks in April, was a higher probability than usual with the strategy, but really pleased with the equity curve we got with this. Over 70% win rate with an average of 1.22R. I'll show you guys the difference between the tags. So entry trigger number 1 was the offsides reversals. So we're going for 2Rs in these cases. So you can see not as smooth of an equity curve. I mean, it's only 11 trades. So, but we got a 7R from this with a 55% win rate. So definitely a profitable strategy with this. But like I said, for those of you that are beginners, it might make sense to just trade the VWAP flips, because actually it looks like the majority of the profits, at least from what I tested so far, came from this trigger, and the win rate's super high. I mean, almost 80%. You're obviously only going for like 1R per trade. We had that one that we had to close early because the market closed, but really nice equity curve, and it's a very simple entry model, especially if you guys are beginners, and the if the offsides reversal is too complicated. And yeah, definitely a lot of room for potential optimizations as well. Maybe tighter stop losses, maybe trailing the stop after that 1-to-1 hits, but just kind of showing you guys the equity curves between the two of them. So I'll go back to everything. And let's take a look at the remaining information. So we actually had 8 wins in a row. That would have been awesome to trade live and just keep crushing it, but you got to be careful of overconfidence because you don't want to, just because you've won a few trades in a row, you don't want to increase your risk. Only 2 losses in a row, so it seems like we, with the high win rate, you're not going to have super huge loss streaks with this in general. Let's see, we had our buys were slightly higher win rate, but not overwhelmingly. And then let's take a look at the analytics by session. So maybe you're like figuring out what session you want to trade. I believe we have this set up to start at 8 a.m. to kind of count it as New York session. So basically the trades from 5 a.m. to like 7:59 are going to fall under the London session. And it looks like we did have quite a higher win rate during New York session, about 78% versus 64%. So maybe the injection of volume that we get in New York session for the indices makes this strategy a little bit better kind of after 8 a.m. Total trades, we had pretty similar, 17, 18 trades. So there's, just about as many trades in each session. Average risk to reward was actually higher in London session. So maybe we saw more VWAP flips in New York, but more of those offsides reversals in London session. And profitability, not too significant, honestly, 9R in London session and 11.4R in New York. So again, seems like you could trade either one. If you want to trade both, also seems fair game. But 7 hours a day could be a good commitment And then same thing, performance by time. We only had, I think, 35 trades from the sample size, so I can't tell you definitively like, oh, like the first hour of this strategy isn't good or anything. But if you get a larger sample size and you're noticing that certain hours of the day just aren't doing as well as others, then maybe you can cut those out. But we do have pretty sustained volume. It actually looks like kind of on both ends of the chart. You know, I think there's maybe one trade I recorded like a little too late. There shouldn't have been any trades afternoon. And yeah, it looks like Mondays, again, potentially small sample size, maybe Mondays aren't as good for this. As you get a larger sample size, you'll be able to more clearly see if there's a certain day of the week that isn't good and you want to filter that out. But yeah, can't complain. We're up over 20R in like not even a full month. I backtested this from April 4th, 2023 through April 19th. So pretty much like 2 weeks, and we got about 20R between this strategy. So definitely something that seems promising. I mean, SMB Capital literally teaches this a model similar to this to their beginners. So not surprising that it seems promising, and hopefully it's something you guys can play around with. But yeah, let me know if there's any questions you guys have about the strategy, about any of the rules that I went over. If there's anything that's not clear with that. And then yeah, like definitely seems like you could test this on other indices. You could test it on other time frames. If you're a 1 minute scalper, you can backtest this on 1 minute and maybe, you know, see if it works similarly. But I think 5 time frame is also pretty good. I think the trade duration was pretty short in these, like 42 minutes on average. So you're really not in these trades too long. Well, yeah, since we don't have any more questions, I think we can go ahead and wrap it up. But yeah, hopefully you guys found this strategy interesting and something that you guys can kind of test out looking at late London session or early New York session on indices to kind of see if it's something that's you guys want to test out. So let me know in the Discord if you guys start backtesting it, and yeah, definitely feel free to share your backtest now that we have that new feature. It's a pretty great one. And yeah, hope you guys have a great rest of your weekend, and I'll catch you later. See you guys.